God puts us in nations, in places, not by mistake, but to do a job. What if we opened our eyes to the needs of our colleagues, of our leaders, of our subordinates, and we were a priest on their behalf? Welcome to the Repurposing Business Podcast. My name is Brett Johnson.
And I'm Len Johnson.
And we're going to be talking about how to get our business into God's business. Our subtext is Let My Business Go, and we'll have guests from around the world. So thank you for joining us this week and every week on the Repurposing Business Podcast. Well, welcome to the Repurposing Business Podcast. I'm here with Cobus Visagie, and Cobus is based in the UK. Cobus, welcome.
Welcome, Brett. Thank you very much for having me.
Yeah, and Cobus isn't always a resident of the UK, and he has a business in South Africa, in sub-Saharan Africa, goes back and forth, but is living with his family outside of London. So, Cobus, how does a fine South African lad like yourself end up in the UK?
Well, in 2003, I thought it was the end of my rugby career. I was also at the end of a 7-year period with PricewaterhouseCoopers in Cape Town. And I just turned 30 that October, and I thought I'm going to retire from all joyful employment and lay down my boots and pack it away. And then I got an offer the next month from a number of clubs to come and play rugby in Europe. And eventually I ended up signing a contract with Saracens Rugby Club just outside of London and St. Albans. And I thought I had 18 months in me. We didn't unpack our house, or we just left the house, took 2 suitcases, a pram with a 5-month-old daughter, came over here on an 18-month contract, and I ended up playing another 6.5 years of rugby, which then led me to go into rugby management for a while, and then ended up joining a private merchant bank in London. I got the idea for my own business, and then in 2012 I started my own business, focused on sub-Saharan Africa. And London is a brilliant place to run an African business from, for different reasons. And so I think we will make by God's grace, it seems like this is now our home for the future, and we've got 3 children now, and they are very English. So to take them back to Africa now will be a little bit like Madagascar, They've grown up in the zoo over here. They won't be able to do the safari, the real thing in Africa.
Yeah, that's quite something. Sounds like when I was with Pricewaterhouse and they sent me to the US for a year, and same story, 4 suitcases though we had, and two babies. And the problem was, as the plane landed, God said to me, this is going to be your home for quite a while. And when he says that, then quite a while is longer than normally than what I have in mind. Yeah. Mm-hmm. So fascinating. So you moved rugby management then into the finance world, and London is a fabulous place to be. And with all the good, the bad, and the ugly of finance, but it certainly is much more of a hub for things financial than we think of here across in the US, and so central to so much. Yeah, and even post-Brexit, it looks like half of the European continent is now setting up in London, right?
Yeah, I mean, there's definitely a flow in 2 directions, although, the flow of business out of London was highly overstated in the run-up to the Brexit result. There's definitely been a significant move of business and capital outside of the city now as well, mostly because of regulatory requirements, both for US firms that do need to have a footing in the European Union. But likewise, European banks and other financial institutions have to have offices in London. And so it's interesting phenomenon. I've looked at offices about 2 years ago, and have recently also looked at moving offices and dealt with different agents. And the London office market is white hot because of all these units looking for 10-man offices, 20-man offices, representative offices. So it's definitely two-way business movement there, but there's no doubt. The reports are about 10% of London's capital has moved to different destinations under European regulation. Mm-hmm. I may just also, from an African perspective, the question of dealing out of London is always asked, especially when I raise capital in the US. But London, all the development finance institutions have got representative offices in London. Even the German, Swedish, Norwegian development finance institutions. And then, us as a business focus mostly on Anglophone sub-Saharan Africa, right, which are all Commonwealth countries and are very well represented in Africa and in London, both with embassies and, chambers of commerce, as well as all your major private equity funds operating in Africa has got representative offices in London. So it's a very good place to, although we mostly represent the African entrepreneur, the capital sits in London.
Yeah. So let's unpack a little bit what you're doing. And our theme on this series is When Capital Meets Eternity. Now, eternity is, in some respects, it's a long way away. And in other respects, it's here already. We're part of the kingdom of God. We have eternal life already. And it's a now thing. But I know that unlike some investors, you have a long view on Africa. And I'd like to unpack with you a little bit about that. So why don't you tell us a bit more about your firm and what your focus is and your time horizons as you think about Africa?
Okay. When we started out, it was only myself and another South African guy called Jan-Louis van der Berg, and we are both South African chartered accountants, and Jan had some times in the London banks with Barclays and worked for Wells Fargo, also CFA qualified, but we actually didn't come from the investment banking world. So you can say that in a certain way, we were unqualified to go into investment banking and then very shortly after that, start our own firm. But we were introduced to a couple of concepts. And one of the things that I found out very early on, and this is relative to the world systems out there, and specifically the institutional and asset management vehicles through which the investment is taking place in the world in the form of private equity funds with GP/LP structures that's been developed now over the last 30 to 40 years, and which was later then adopted by the hedge fund industry as well. Now, what has happened over time is that many different other asset classes have been adopting the same kind of process of raising funds to invest or to lend, whether it's a debt strategy or a venture capital fund or a private equity fund. And the only differentiation is really the fees that they charge and the tenure of the fund. So typically your private equity funds was normally 3 to 5 years. These days they become longer and longer, so typical 5 plus 2 years. Your infrastructure funds, they realize they have to be 10 plus 2 typically. But our thinking around that was more to create a permanent capital vehicle and to focus on the private markets. Now, the reason for that is that at the moment, the African markets outside of Egypt and South Africa, so right at the top and right at the bottom, there is not a lot of depth in the public equity markets, and the private markets are not very well intermediated. But so our belief is, and that it's quite a widely held belief, that short-dated private equity funds is not the suitable way of approaching Africa, because to generate the growth and get the momentum in a company that can generate what the global investor base would require from a private equity fund for the risk that you take is typically 3 times money over a 5-year period. That is typically what the market would want, and which is achieved in the US market and the European markets quite widely. It's not possible in Africa. Now, there are many reasons for that. Just one that I can put out is that most of these vehicles that invest both debt and equity in different forms in Africa are all US dollar based, where very few businesses in Africa are exporting. And so you immediately are investing in a business that is prone to suffer from local currency devaluation and all the accompanying risks. And many times you can have a business in Zambia growing at 30%, but the Zambian kwacha is also devaluing at 20% per year, and you're just not getting that return that an investor may feel is giving him the right form of return. And so we as a business hold a fundamental view of creating principal businesses, but we started out as an advisory business, and basically for us to learn the ropes initially, and to also learn our lessons. So today we from the start, actually, we try to do everything really on I would say on a first class basis. We wanted to be the foremost and do it in the best possible way. So we were a regulated firm from the beginning, which is very onerous in Africa, because of all the know your client compliance requirements that you have, that many businesses are not used to, or at least it was not that they were not that used to it 10 years ago. Yeah. And so in our advisory business, we mainly focus on equity raises, and it's typically we focus on the mid-market, where we believe there is the biggest opportunity in Africa. And if I may just describe the reason for that is the moment businesses that validates raising capital tickets of over $50 million are generally in the has access to your international banks, and they can go and raise their money there. And then under $5 million typically can be managed within the local economy. Yeah. And many times it's early stage. So in that $5 to $50 million ticket size is typically your African mid-market in the private markets, which is the market that we focus on, both with our trade finance business and our advisory business, and also the asset finance that we do. Yeah. I think I'm gonna. So our methodology is that today what we've managed to do is have these different verticals. We've also got an infrastructure business where we focus on last mile fiber, where we are co-investor in a fiber business in Namibia. But our trade finance business is now about 5 years old, and we managed to bring a private equity fund on board last year, and that made of us to be for the first time authentic old school merchant banking outfit. So we are the lender of record. Yeah. We deploy from our own balance sheet. We have got our own capital that we deploy, and we match that with funding, like a bank would, on the back of risk participation agreements, bank-to-bank risk participation agreements, which is something that you can do in the UK,
Yeah.
And we would actually not be able to do this if we were, for instance, based in Nigeria or Cape Town, South Africa, or in Nairobi, because we will fall under certain financial regulatory requirements that would not make that possible.
Yeah. So, Cobus, one of the things that's interesting is you talk about the dynamics in Africa. I've seen an increased interest among investors in the US in investing in Africa. And a lot of that is driven by passion. It's driven by they want to make a difference in Africa. But it seems from what you're saying that could it be that if they bring their traditional private equity mindset to that, they could do more harm than good because it places a pressure on the investment to perform, and that can bring out the worst in the operators. Apart from even the foreign currency exposure, the time horizon, the Western expectations, and then people have to cut corners and do stuff. Would you say that's an unintended consequence of a good desire?
To be honest with you, yes, we also see new interest in the market. I must be honest with you, I think across the board of what I've experienced is that most investment firms are patient and they are respectful and they try to do it. But I do think they are also, it's a sobering experience to realize how ineffective you can be in these markets. The things that can stand in your way that you just couldn't predict before you went into the transaction. Let's just say you were investing in a business exporting out of Nigeria, that you cannot fathom how inefficient the border patrols administrative systems are. You can take 3 months to get a product out of the port. The bureaucracies, if you want to, say for instance, you're a British business, and I'm sure the US business is the same with anti-bribery laws. You can invest in a company that you were not aware of because they don't call it bribery. They call it just payments to get stuff over a border post. And many firms have fallen foul of it. Most recently there was, or about a year ago, there was investment by WPP in the biggest media business in Kenya. And it was a listed business. We had a public equity fund at that stage. We were invested in this business. And all of a sudden, the sales of the business just dropped off a cliff. And in the end, it was basically that the governance, increased governance from the UK came into the business, and they realized they had to cut off all the normal payments that was made to gain, media contracts within the Kenyan market, which in the end resulted for the company to lose, almost half its turnover. So those kind of things I've seen more of. And I would just say lastly is it is well known that most private equity investments in the US and in Europe is accelerated and can say, it's accelerated by very high leverage. Mm-hmm. Now, for people that are interested in this and listening to this, the cost of working capital in West Africa ranges between 18 and 25%. Yeah. And in East Africa, it's also in the range of 15 to 28, 30%. Yeah. So it's almost as costly as equity in the first world. So it's a very inefficient way it's very costly to leverage a company in Africa, and it's not available. And hence, you need to have a very strong organic growth forecast for business to do well. And that is why that's one of the main reasons why you cannot get that type of returns on the same risk profile in Africa.
Mm. Mm. So, Cobus, as you are looking at opportunities, which you do on a very professional basis, and you put great pitch decks together, and you do this, just as the major players would do. But you're also thinking about, what are you doing in particular nations? So you choose particular nations, not just based on language, but based on profile. How are you thinking about the influence that capital has on those nations? How's that factoring into your thinking?
Look, I am well aware of that God has got a purpose with nations, that God has got a vision for nations, and that God operates at that level. I think at this stage, I also believe in, and like you say, I think firstly, the character of a business is really just the people that are in the business. The kingdom of God is in me. The kingdom of God is not in Africa Merchant Capital. The kingdom of God is in me and Jan Louis and our staff. And we collectively need to bring the kingdom of God from heaven to earth. And the business is part of the instruments, but it's got no life. We are the life.
Yeah.
So at the moment, if I'm very honest with you, and as I've thought through this, is I have scaled, if you want to use the example of the mountains, I've scaled the mountain of sport, very to the highest level.
Yeah.
And I'm scaling the mountain of business in a very slow and methodical and conservative way.
Yeah.
At this stage, I believe, and my view is that I am not influential in a political way at all. I do not have that inclination or the vision at the moment. And I think what I perceive in my spirit is that as I grow older, that I may grow into that type of relevance. But I have not seen anyone operating in the African markets that I admire that firstly focus on the political side of things. And for me, the focus at this stage is to work with good counterparties. The thing that I pray to God for, and the thing that we as a management team pray for, is that God will bring to us his provision, which is his provision in people and opportunities that he wants us to touch. Like I would specifically pray for good credit counterparties and honest and trustworthy clients and borrowers, basically. And I hoped at that level, firstly, to use our gifts and the resources that have been made available to us. And so that's part of my, when I pray for my Lord, I pray for my daily bread today. Part of my daily bread is to be connected on a daily basis with the people that God has provisioned for me at the beginning of the age for my business to touch.
Yeah.
And it may lead to that highest level. But I'm almost will say to you also very honestly that in trade finance, we actually avoid anything to do with governments.
Right.
So it's a very dangerous thing to get involved in Africa, unless you are a multinational with a very good standing and backing from your government. That's what you typically would have, if you are Total or the French government will support you. If you are a strong US business and things go wrong, the US government will come and stand behind you. Nobody's going to stand behind me if I'm if I'm on the wrong side of government officials, or if a government don't pay out of contract. So we try and stay with what we call real commercial transactions.
Fantastic. Okay, so from a business perspective and a political perspective, you stay away from government, but when it comes to, you're expanding your household through capital, right? So you're saying African Merchant Capital has a certain amount of capital. We bring in co-investors, we find local partners. $100 or £100 of capital gives us more than 100 pounds of influence. So in some respects, you're leveraging influence through your capital, not into government sectors, but just as the kingdom operates, like yeast or like salt. I hear you saying that you're using capital like that, right?
Yeah, no, definitely. I mean, but I would also just, I mean, you have also got experience of this. In Africa, and I think it's the same in South America, it's the same in Southeast Asia. When you go into a market like that as an alternative financier, and if you just take, as you know, the South African market, where there are only 4 major banks. Why is it like that? Because they controlled the Reserve Bank for 50 years. If nobody else can operate there with the exchange controls, then South African banks are the most profitable banks in the world when it comes to fees, because the market is so small. And basically every other lender is pushed out of that market. Right. For different reasons. So we need to recognize, African Merchant Capital, I need to recognize when I go into the Ghanaian market or the Nigerian market, or if I go into Rwanda or Uganda or Kenya, is the way that I need to approach it is that at this stage, we are just trying to fill a gap that cannot be filled within the country, because otherwise you will be seen to be competitive. Yeah. And politically at government level, they will not want you there. Yeah. Because there will be lobby groups that are more connected to the commercial banks if you are going to meddle into their business. Right. And so there is that dynamic, and not even the biggest banks, not JP Morgan nor Standard Chartered could go and push those guys around in any of those countries. Yeah. And unless I've got the mandate, to say, okay, the people on the ground to serve. What is a fact is that the people on the ground deserves access to better cost of funding. Yeah. The people on the ground, the entrepreneurs on the ground in Kenya, in Ghana, in Botswana, they need access to more flexible and a wider variety of credit options to them. Yeah. But you need a mandate to go and step into that.
A mandate as in a mandate from God, or as in a...
Yes.
Yeah.
Look at the Holy Grail. I just want to say the Holy Grail, and it is in process, and there are some lines available, but it's taken an incredible amount of time, is to get facilities from development finance institutions that are local currency based. That is the Holy Grail of Africa. And the African Finance Corporation, the AFC, and the AFDB, African Development Bank, has certain local currency facilities now. Nigeria has created a Naira-based infrastructure fund and so on. And so there are some fundamentals that are missing in the market that US, UK, European-based person will not understand. Even an Asian person will have difficulty to understand how shallow the capital markets are. Number one. Number two, there is a very, very small insurance market in Africa, and there is a very small pension market in sub-Saharan Africa outside of South Africa.
Right.
So the result of that is that you do not have that access to local currency for infrastructure development, because most of those guys actually just invest in the commercial properties that are available and they invest in bonds.
Yeah.
Bonds. And so nothing is really, there's no, like you have in South Africa, the PIC, where there's money going into the private equity market and in other funds. And so the funding available for infrastructure in local currency, which, you know, it's I don't want to go into the details of it, but South Africa has got such a fundamental infrastructure gap, and you cannot fund long-term debt in hard currency in Africa. You can do the equity in dollars, but you cannot fund that long-term debt. You know, doesn't matter what that interest rate is, because of devaluation, it will become so expensive. It's debilitating.
Yeah.
And so hence what Africa needs is local currency based long-term loan funding. And that's very limited, and hence the lack of infrastructure development.
Cobus, what's your view on the assets of Africa? I mean, we hear a lot of talk about the fact, or perceptions, that there are a lot of raw materials, assets, and so forth in Africa, that it's a growth market. And obviously, you're looking for quality assets. And historically, foreign capital has done a bit of asset stripping in Africa. It's taken out raw materials. It's done very little local beneficiation and value adding. Do you see that changing as Africa becomes a bit more sophisticated? Do you think that helps Africa generate its own capital base if that is remedied?
Look, at the moment, as strange as it may sound, is the whole climate debate at the moment, as much as I want to support it from a Christian perspective and from a responsibility perspective, that we all need to contribute positively to climate change.
Right.
The narrative at the moment of the withdrawal of all financial institutions from carbon heavy industry and, for example, coal-fired power plants is an absolute disaster for Africa.
Yeah.
Africa sits on the most coal in the world.
Yeah.
And there's no financing available to build a coal-fired power plant. They've never been a major contributor to the carbon footprint of the world.
Yeah.
But in a time where China is rolling out 50 power stations as we speak, Africa cannot fund 3 power stations.
Yeah.
And so everybody's got this, not everybody, but what you will hear on many platforms is, oh, there's a lot of solar available and we can build wind and so on. And yes, we can do it all. And we can do hydro, but Africa's got droughts. The hydro is not going to run the whole year.
Yeah.
And should all the poor people now sit in the cold with no electricity when the wind doesn't blow and when the sun doesn't shine? You know, it's impossible. Africa is $50 billion per year for the next 50 years behind in electricity infrastructure.
Yeah.
And so
you sound a bit like Donald Trump now, you know, Cobus.
No, it's like I said, I am support, you know, I recycle and I do my bulbs, and my next car will be an electric car. I support all of that. But for Africa, it's such.
Yeah.
Is when you don't have a base load, you need base load. So what are the options? Number one, you know, and what is the difference in Africa for people to burn trees by the millions of cubic meters a year?
Yeah.
For cooking, if you can do it in more efficiency if you do it in a coal-fired power plant with carbon capture.
Right.
It's that calculation is known. to be in favor of building the power station. But the reason where I'm going, Brett, is unless the power issues of Africa is dealt with, Africa will not become a competitor in anything, because even in the tech sector, to drive data centers, you need a lot of electricity. You know, to export most tropical and other fruit, you need refrigeration and cold supply chain. It needs a lot of electricity. To beneficiate aluminium, copper, steel, you need a lot of electricity. And Africa there is not one country in Africa that has got enough electricity. So that's where everything. And look, electricity is going to be an important conversation, and it's going to be with us for the next 20, 30 years, you know, even in the US.
So principled, quote unquote, investments, the whole push towards ESG and so forth, you know, environmental, social governance. I mean, it looks good on paper. It reminds me a little bit, I was watching a video of a guy who was traveling around the world, and he was in Tanzania, and they were talking about COVID and the pandemic. And clearly there were cases there, but they just said, we're not going to lock down. And a guy on the street said, look, most of the cases are in people above 65 years old. Our life expectancy is 63. And we can't shut down our livelihoods. That will kill us quicker than the COVID. And so it's a little bit of that, get on your high horse from an ESG perspective. And it's almost what I would say in this era that we live in, there's a spiritualization of capital from my perspective. You know, it's tied to a cause, it's tied to a political party, it's tied to philosophy. And we've gone away from some of the pragmatics of what's needed to actually meet the needs of people, to bless a nation, to build up a nation.
Yeah. Look, a number of years ago, we raised capital for a poultry business in Malawi. Malawi is the second poorest country in sub-Saharan Africa. But because the money was coming from a European development finance institution, they insisted that European laws for chickens, for poultry, laying hens should be adopted, which basically means that there should be a little doll's house, a treadmill machine, a beauty parlor built into each little cage, you know.
And a pension plan for the chickens, The
United States rejected those requirements, okay, which now they want to enforce on a Malawian-based business. So I do think that, like you say, it's a utopian view of everything. And one of the things that I can say to people who listen to this is the money that is made available to Africa is made available on an incredibly prescriptive manner. You know, at the highest point to the where it will instruct around laws on abortion, laws on death penalty, or, you know, views on all kinds of manner of laws within a country is prescribed to. And you can understand that in the process of doing that the African governments are veering towards Chinese funding. Because the African psyche, and many times it's more Christian psyche, do not want to sign up to a lot of things that are expected from governments from first world governments. And that is a very problematic issue that will require a lot of thinking. And I would just say, if the world wants to be really pragmatic about this, they need to, on things like carbon emission control and, you know, get to zero carbon, is if China is committing to be carbon neutral in 50 years, you know, then Africa needs to be carbon neutral in 100 years. And somebody needs to cut them slack. There is nothing to take away almost at the moment.
Yeah.
And that is the pragmatic view that we need to take to solve the development finance requirements of Africa.
Kind of raises the question a little bit, and I know you've thought about this, Cobus, about having more of an Africa-wide fund that is managed, governed in Africa with a bit of a buffer, so that you don't have the enforcement of so-called first world standards and philosophies and mindsets, worldviews on a continent where there's a disconnect, where it's not respectful of what goes on locally. I mean, is there a need for an Africa fund, multi-billion-dollar fund that would have overseas investors, but those overseas investors wouldn't just go directly into projects in countries because the requirements are just too onerous?
I almost want to say to you, it's what we would call the dry powder available for investment in Africa is massive. There's just in private equity, there's more than $10 billion available for investment. So there's actually not too little. Yeah, it's the breakdown of that can be that some of this is just for East Africa, just for West Africa. Some of it is just for technology, just for infrastructure. And I must say, recently, with the input of a lot of US investors, there's some very interesting venture capital developments where, Africa's had their first unicorn, and there's a couple of other, especially in the fintech payment system, the M-Pesa and other payment systems developed through the telecom industry actually is world leading. But I believe where there is a massive dichotomy is funding for specific industries that are in its infancy but going to be very capital intensive, but the development finance institutions are not willing to engage there. Now, there are different levels of that, but I'll give you one example where you will not be able to get funding for this, but it will be the biggest opportunity possibly in Africa for the next 50 years is just cold supply chain. And you can break that down in cold supply chain for export and for import, but you can just take one vertical is healthcare. Example of vaccines, but things that you take as standard, to distribute medicine, across the US or Europe is, people don't even know how it happens.
Yeah.
But it's non-existent almost in Africa, and it's very, very expensive.
Yeah.
So that's just one industry that you can almost develop from scratch.
Yeah.
And but who's going to fund that?
Yeah.
Nobody.
Very interesting. Very interesting. Yeah. Well, it's good to see that Rwandans delivering medicines via drones, but in small quantities. Yeah.
But good start, but Africa is forced, for different reasons to jump certain development stages.
Yeah.
Because Africa don't have fixed line infrastructure, they went much faster in mobile and and everything else like that. And that is why maybe the adoption of drones, and we already see that, for instance, with some of the agricultural businesses that we work with, is one of the things that COVID did was it was almost impossible for people to fly into countries to do due diligence. And so to get a third party in Africa with drone footage is a very good way to due diligence, a real estate or a agriculture investment.
Right. Yeah. 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 So, Cobus, talk to me a little bit as we head towards a close of here. What's your hope for Africa? And then specifically, how would you, in a best case scenario, like to see kingdom investors and kingdom capital play out in the African context?
Look, I think when God said patience is one of the gifts of the Spirit, he would specifically for somebody that is going to operate in Africa. So, you know, what I pray for myself is patience. What I would recommend anybody operating in Africa is patience.
Yeah.
But it's still the land of opportunity, and I do think that because there are so many countries, there are so many sectors. I think the way that I would approach Africa is not to rely or want to change regulations in any country. I think you need to respond very quickly when there's been a positive change in regulation and use it to your benefit because otherwise you can sit on within African time and African government's time, and that's going to be a very big waste of your time and your money. And so I also think when you approach Africa, you should have a regional approach. So you should say either I focus on Southern Africa, or I focus on West Africa, or I focus on East Africa. It's different worlds, and mostly one country is too small to really move the needle within a US from a US investor perspective. But for instance, if you put Kenya, Tanzania, Uganda, Rwanda together as a strategy to build out a retail option or whatever it may be, it becomes more attractive and you can utilize some of the advantages. There are certain geographical, regional advantages that you can utilize within that. And the same with doing South Africa, Namibia, Botswana, Mozambique, maybe even Zambia together as a strategy. The same if you put Ghana, Nigeria, Togo, Benin together as a strategy, you can do that. That is other advice that I would give. I also think that when you go in as an equity investor, that you should also have your funding, your debt funding considerations well planned and arranged, because you're going to need it, and that's really where your investment is going to stand or fall in the end as well. What further funding you're going to have available. And then I just think, lastly, I think from a kingdom perspective, specifically, is human development. Look, they are the people that I meet in Africa and the people that I meet in London that are African. I meet incredibly well-educated Africans, you know, that makes my couple of degrees that I have look like I've been looking for parking my whole career academically, you know. They know both Africa, and they've studied at Harvard or Stanford or Cambridge, Oxford, and half of them have done both, you know. So so I believe that you should really look at your top and middle management and not have a expat strategy to manage businesses in Africa. You should use local talent, and you should bring in external Africa talent to manage your businesses. And I think that's where a lot of investment also stand and fall. And then lastly, you know, under the heading of patience, you should just have a longer return horizon, and be more patient in the way that you believe the transaction is going to unfold. And Africa is such that by the time that you really get to the place where the business is attractive to sell on, you almost will not want to sell it on, because that's when it's going to become really cash generative, and the strategic and vertical integration opportunities will become very significant.
Mm-hmm. Mm-hmm. Yeah. Wonderful, Cobus. Thank you so much. I just concur on that last point, that I've met so many smart Africans, and also out there in the diaspora, and many of them now have an interest in having an influence backwards, and that bridge back and forth, not just the financial capital, but human capital, intellectual capital, people who might forever live in the UK or the US, but they're willing now to go back and forth, and to be a bit of a bridge on that, I think is a great opportunity.
Yeah.
So I think it's smart. Yeah. Great. Well, Cobus, thank you so much. Blessings to you and your company, you and Jan Louis and your team. And we look forward to seeing you go from your advisory stuff to your infrastructure stuff to being a real Nehemiah who scouts things out and takes a lot of capital and stuff with him and makes a difference in different parts of Africa. And we hope we don't have to rescue you from too many bush cafes with strange menus in the future.
Happy cafe. Thank you very much for your time, Brett, and I hope this could bless somebody, and I hope to come and visit you there in Middle America soon.
Fantastic. We look forward to seeing you. Thank you, Cobus.
Thank you. Have a good day.
You too. Bye-bye.